Hello everyone, this is Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of April 1st. Each week I go through the same process, just deciding how aggressively I'm going to be deploying capital. And we do this through a few parameters that we look at, which we'll discuss. If you're watching the video and you're ever wondering where this article is, because it gets updated each week, you can go under stocks, and it is under stock market analysis and trades on the TradeThatSwing.com website. So let's get to it. In terms of the watch lists that I'm watching right now, we have the best swing trading stocks watch list, which is high momentum stocks. There is a method in there that is discussed. We also have the current stocks watch list. That's actual patterns that are forming. So those include earnings plays, tater trades, chart patterns. That'll be updated early in the week, and so will this one because we're using, it was updated a couple weeks ago for about middle of March, and we'll update this for the start of April as well. So you can watch for those lists to be updated. You can always check out these other lists as well for some other trade ideas. Let's get to how the indices are doing. So we can see the NASDAQ being a little bit choppier here lately. You know, we had this nice strong uptrend, and we've been moving sideways for the month of March. You know, if we start moving up again, great, but, you know, just a little bit of choppiness at the moment. NYSE Composite pretty much straight uptrend. S&P 500 uptrend. We had a little bit of choppiness there at the beginning of March as well, kind of similar to the NASDAQ 100, but we have now started moving higher again. Russell 2000 has been a little bit more the Russell 2000 index a little bit more choppy overall, but we are in an uptrend currently. Canadian index, a little bit more basic materials, energy based. It is moving well to the upside. Let's quickly look at Bitcoin. It has approached its 2021 high and exceeded it, and we're kind of whipsawing around there. This is actually common if we look at other situations like this where we had a big bear market, which is a 70% plus decline for Bitcoin. That's at least what I've labeled them as, because we tend to get these big moves after those 70% or greater declines. Once the price retakes that old high, we typically get whipsawing of 15 to 30% for about a month around that old high. So we're seeing that. We're a month into when we first hit it, and just kind of whipping around. The price has resumed higher ultimately, but of course manage your own risk, and we'll see what happens here. But this kind of whipsawing around here is common. Gold has broken out, and I zoom this chart out quite a bit. This is showing more than 10 years of price history, where we had this big high way back here, had this huge bear market. We came back to it, and we've been hanging around that old high for years now, and we finally had this big breakout. So that's good. That looks really bullish for gold. I would prefer if the gold miners were also following the gold stocks. You can see they're still pretty weak compared to gold. This one's a little bit more zoomed in, but even just compared to recently, we're trading below prior swing highs, but at least we're moving up currently. So all the big runs in gold have typically, the miners have gone with them or led, and we're not seeing that at the moment. Also, I don't specifically trade gold. It doesn't move a whole lot historically, so it's just not my cup of tea. The gold miners, on the other hand, they tend to move as much as 5 times or more what gold moves. So I prefer, and this, since we're looking at stocks, I prefer trading the stocks. They just move more percentage gain potential. So I'd like to see those moving more aggressively. And I trade what comes up on my scan list. So if we start seeing lots of gold stocks on the scan list, I will trade them. If we don't see them on the scan lists, which include strong stocks, then I won't be trading. Let's look at the market health indicators. So this is a chart of the S&P 500. And this first indicator here is how many stocks are above their 50-day moving average. Just a very crude measure of stocks and uptrends. Generally much easier to make money on the long side when you have most stocks in short-term uptrends. Just kind of makes sense. And if you look at these periods, when it's above this 50 line, this big black line, then we're generally moving up. When it's hugging that line, we tend to get choppier trading. When it's below the line, we tend to be moving down or very choppy. So I have a little bit of an inquisitive face on this one. The S&P 500 looks good. 83% of S&P 500 stocks are above their 50-day moving average. 66% of all US stocks are above their 50-day moving average. But you can see it was just hugging that line for a long time, even while the indices were moving up. So it's just an indication that, maybe a lot of stocks weren't quite as strong as the indices were indicating. It is starting to turn up a little bit, but it just makes me a tiny bit more cautious. And again, if you were to be fully deployed and just extremely aggressive when everything's ideal, then if things are not quite as ideal, you're going to be a little bit less aggressive. That means maybe less capital deployed, maybe a little quicker to protect profits. If you're using profit targets, maybe a little bit smaller profit targets. It's just we're going to protect a little bit more if conditions aren't ideal, and that continues to scale down. When conditions are bad, we might not be trading at all. When they're just starting to turn okay, we start deploying some capital, and then as things get really good, we're much more aggressive. Or at least that's how I do it. Volume, not important to me at the moment. This one here is rate of change, the percentage daily movement of the S&P 500. And uptrends are characterized by low daily movement, especially no big drops. 2% drops in a day are like my big bad trigger. They say step aside. That shows high selling pressure, lots of selling enthusiasm, people wanting to get out. So it's just step aside, don't trade for a few days after that happens. You can see we have not had any of those in a long time, like we did back in 2022 when we were just at the tail end of that bear market. And throughout this entire time since then, no big drops, which indicates uptrending behavior. And even in this time, we talked about this period here because this was a sizable drop, sustained, but we never got any of those big drops, big selling enthusiasm. So I was just kind of saying in the videos that this was likely to be a kind of smaller decline that would resume to the upside, would unlikely turn into a big bear market unless we started getting those big 2% daily sell-offs, and they just never came, and then we continued upside. So a pretty tapered decline, pretty small decline, and then continued on. So we would have stayed out during this time, but this gave us, because our other indicators were negative, but we did have this indicator telling us that this was likely just a small decline as opposed to a big bear market underway. This is the NYSE advanced decline line. It just tells us number of advancing stocks minus number of declining stocks is a cumulative number, and it is marching up along with the S&P 500, so that is confirming our uptrend. That's good. And this one, not relevant at the moment. We're looking for extreme values, either up by these upper black lines or by these lower black lines. So we want to be above or below this lower one or above this upper one. And you can see all our things are in the middle between them. And this is up volume divided by total volume. It just lets us know how enthusiastic buyers or sellers are. And so we haven't had any big enthusiasm, so we can just ignore that for now. The ultimate indicator is how many quality setups there are and how trades are working. I do calibrate my trading activity to, how am I performing? If I'm not performing very well, maybe I'm picking the wrong stocks, maybe I'm too aggressive when I shouldn't be, I use my results to temper my future trades. So if things are working, then I continue to do what I'm doing. If it's not working, then I back off and try to take a look at why that is. And recent trades have been working very well the last week or so. We've saw the indices moving higher. This past week, things, some pretty good pops, gold moving up, Bitcoin moving up. Doesn't affect the stocks, but the gold stocks might if you were in them. NASDAQ, you can see, still a little bit choppy here. Didn't really have a move up the last few days, but everything else moving pretty well. So I just noticed that in my trading that the trades I had taken recently were acting quite well. This is compared to a couple weeks back, which we talked about. Earlier in March, we had this more kind of choppy trading. The Russell 2000 was moving lower. The NYSE composite was doing okay, but still a little bit more choppy. And then near the middle of the month, it started taking off again. So a couple weeks ago, I noticed a bit more choppiness. My trades would shoot up and then they'd come right back down. And now I'm seeing a little bit more of that sustained buying again. So that's encouraging and tells me, continue to deploy capital. We don't have a 100% perfect situation. We do have I'm still a little worried about this divergence here, so I'm being a little bit more cautious, but overall, things are quite good out there. Sectors on the move. I don't typically trade utility or consumer defensive, so I just ignore those because they don't move a whole lot compared to these other types of stocks. So main sectors to watch: energy, base materials, financials, industrials, technology, communication services. And if we just look at all three of these time frames, these are the ones that are kind of near the top of the list, middle to the top of the list on all three time frames. Technology, a little bit more sold off last week, but I wouldn't totally knock it out of my watch list because it's kind of near the middle here on the 1 month, and it's the top performer over the last 3 months. So all these I think are good sectors to be watching right now. So what am I doing? I'm willing to deploy capital on long trades. I'm still just a little bit cautious. Things are still good. They're not like absolutely perfect though, but still quite good. So I'm willing to do that. And then of course, I can always day trade, swing trade for capturing those short-term opportunities. So that is your stock market outlook for the week of April 1st. Happy Easter to those of you who celebrate it, and have a great trading week out there.